All right. Hello, everyone. I'm Lightman Chimso, and you're welcome to Light on the Chat. You're welcome to Light on the Chat. So today we are going to be talking about forex trading for beginners and how money is actually made in forex trading. Because that's the question most of you beginners have. Because you meet a beginner and you tell them you into forex trading, the question they ask is, so this money you're making, can you actually like withdraw it directly to your bank account? That is the question they ask. So yeah, I'm going to be breaking down what forex actually is in the simplest way possible, so that you too can actually understand what forex trading is all about. So that's it. That's what I'm going to be breaking. That's how I'm going to be breaking down, so that it's simple and easy, so that everyone can get to understand what forex trading is all about. So yeah. So before we get on with it, before we go on with it, I would love to know where you're joining me from. I myself currently I'm at GRA, Port Harcourt, Nigeria, and I would love to know where you're streaming me from. Hit in the chat box. Let me know where you're streaming me from. Let me know where you're streaming me from. Drop in the chat box. Let me know where you're streaming me from. Let me know where you're streaming me from. Hit in the chat box. Let me know where you're streaming me from. All right. So make sure you share this to your status, your social media handles, your IG, your Snapchat, your WhatsApp story. Just let it go viral, guys. Let it go viral. Like, make sure you share, and if you're not yet subscribed, hit subscribe, and let's get on with it. Let's get on with it. So yeah, I would love to know where you're streaming me from. It's in the chat box. Let me know where you're streaming me from, guys. Let me know where you're streaming me from. Let me know where you're streaming me from. Make sure you share. Make sure you share. Let people be aware of it. Share to that your friend, your brother, your cousin. Let people be aware of it. Let people be aware of it. Let people be aware of it. Okay. 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 Didier is watching from the back of Tibo Ferro. That's nice. Welcome, Didier. And all right, just let me know where you're watching me from. Let me know where you're watching me from. Let me know where you're streaming me from. Let me know where you're streaming me from. Let me know where you're streaming me from. So make sure you share. Make sure you share. Let's get the numbers up before we start, so we don't leave the other people behind. Okay. This is from Isubu Eastern Fast, streaming from Port Harcourt Attachment. All right, nice to meet you. Nice to meet you. Nice to meet you guys. Nice to meet you. Nice to meet you. Share to your story, your Snapchat handles, all your social media platform. Like on the chat is live. Share. Yeah, share. All right, share. So let's wait for the numbers to come up a bit, so that we can actually dive in to the business of the day. Yeah. Let's wait for the numbers to come up so we can actually dive in into what we have for today. Okay. All right. Let's wait for others to join in. Let's wait for others to join in. Let's wait for others to join in. Yeah. Okay. Okay. Oh. So if you are here with me, I would love to know if you can hear me clearly. If you can hear me clearly, you can hear me clearly. If you can hear me clearly, drop number one in the chat box. Drop number one in the chat box. If you can hear me and you can see me clearly, drop number one in the chat box. It's already 6:35, so we are no longer waiting for anybody. Let's get on with it. So if you can hear me clearly, drop number one in the chat box. If you can hear me and you can see me clearly, drop number one in the chat box. Drop number one. Number one. If you can hear me clearly, drop number one in the chat box. If you can see me clearly, drop number one in the chat box. Because I don't want to start streaming without people seeing me. All right. And also drop your location, where you're streaming me from. I'm currently at GRA for Harcourt, Nigeria. I would love to know where you're streaming me from. Where you're streaming me from. I'd love to know where should we move from. All right. Okay. Okay. One, one. All right. All right. All right. All right. All right. So yeah. Okay. So you guys can hear me clearly. You can see me clearly. All right. That's nice. That's nice. So going on the business of today, what is forex trading? So if you've ever heard about forex trading, what it actually is, or you've heard about it, you don't know what it actually is, you've just been hearing about it. I want you to drop number two in the chat box. Drop number two in the chat box. Drop number two. Drop number two. If you don't know what forex trading is, or you've never heard about it, drop number two in the chat box. Drop number two. Drop number two in the chat box. Let me know. Drop number two. Drop number two. Drop number two. Drop number two in the chat box. If you don't know what forex trading is, drop number two in the chat box. Drop, okay, 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 two, okay, okay, two. All right, all right. So don't worry, I got you covered. Today I'm going to be explaining what forex trading is. So in the simplest way possible, so you get to understand it very, very well. All right. So if what's forex trading? Forex trading is exchange of currency of different countries. So for example, if you travel to the United States, right? Once you travel to the United States, when you get to the embassy, you're not going to be spending your Nigerian naira there at the United States. You're going to convert your naira to dollars, obviously. That is what you're going to do. So that is basically forex trading. But this time we get to do it on our mobile, right? We get to do it on our phones. Yeah, that's how we get it. This time we are not, going to check hard currency. This time it's basically on our phones. But obviously it's not the same like US dollar and the naira. It's between different currencies of different countries with strong and larger economies. So that is what we are going to be doing. That's what forex trading is about. Exchanging one currency for the other. So that's what forex trading is about. That is what it is about. So now we're going down to sessions in forex trading when the market is actually open. So the forex market is actually a 2-4-5 market. So it's open 24 hours, 5 days a week. That is Monday all through to Fridays. And then it closes and resumes again on Monday for a new trading week. So that's the session of. So we have different market sessions because the market is only open when banks all over the world are open. So the first session which we usually have is the Sydney session. The Sydney session, that's when the banks of Australia they are open because they are way ahead of us. So when the Sydney session opens, that's I think we at Nigeria here will be about 9 p.m. Nigerian time. Okay, it will be about 9 p.m. Nigerian time in the evening. So that is Sunday evening. That is when the market gets to open. But for Sydney, they're already way ahead of us. I think 9 hours ahead of us. So they're already currently Monday around 8 a.m. their time. So that is when the market gets to open. So if this makes sense so far, this makes sense. Drop number 3 in the comment section. Drop number 3. Drop number 3. If all I've said so far is making sense to you, drop number 3 in the comment section. Drop number 3 in the comment section. All I've been saying is making sense to you. Drop number 3 in the comment section. Drop number 3. You said you can't see my screen. Someone said you can't see my screen. If you can see me, if you can see my screen clearly, you can see my screen. If you can see my screen, if you can see me clearly, and if you can hear me clearly, let me know. Let me know that you can hear me. Let me know you can hear me. Okay, 3. So people are actually following what I'm saying. It's actually making sense to them. 3, 3, 3, 3, 3. Okay. That is good. So people are actually following me. Okay, so they said they can also see me too as well. So whoever said you can't see my screen, I think you should close your YouTube and reopen again, reconnect. Maybe it's from your network, maybe it's from your end, because people can see me clearly right here. So with that being said, right? So the first session of the market, going back to the first session of the market, is Sydney session, which is around 9 p.m. Nigerian time because they are way ahead of us, right? So, which the next session that follows is the Asian session, which is around 12 a.m. Nigerian time, 11 p.m. to about 12 a.m. Nigerian time, because they also are ahead of us. And then it runs from Asian session runs from about 11 down to about 7, 8 o'clock UTC plus one. That is Nigerian time. And then the London session, which is my favorite session, which is the session I love trading. For those of for those of you who have been trading with me in the Telegram community, you guys know there's a London session. I drop all my trades in the morning because me and London we're in the same time zone, right? So we and London we're in the same time zone. So that's where I get to trade because it fits actual time, 8 a.m. That is when I'm most active, right? Because I don't want to be trading the night. So I don't trade the Asian session, Sydney session. I only trade the London session. So which is around 8 a.m. Nigerian time because we are all in the same time zone, right? And then the next session is the New York session, right? Which is the New York session, which is around 2 p.m. Nigerian time because that is when the banks in the United States gets to be open, and that is around 8 a.m. their time. But here, since we're in a different time zone, it's around 2 p.m. Nigerian time. So it overlaps with the London session, right? And that's when people get to trade actively the most. But I personally trade the London session and partly the New York session because those are my active time frames actually. So that's when I get to trade. So yeah, that is it. That is it. If you understand, if all I've been saying so far is making sense to you, drop number four in the chat box. Let me know. Let me know. Let me know. Let me know. Drop number four in the chat box. If all I've been saying is making sense to you, drop number four in the chat box. Drop number four. Drop number four. If you've been following me so far, drop number four in the chat box. Drop number four in the chat box. If you've been following me so far, drop number four in the chat box. If you've been following me so far, drop number four in the chat box. Let me know. Let me know. Okay, okay, okay. For, all right, okay, all right. You guys are sticking to nice one, nice one, nice one. So moving on, I've explained what the sessions are and different time zones, why people get to trade differently. So the different time zones, right? In the forex market. So I've explained what the forex market is and different time zone when the forex market gets to be open and when it always gets to be closed. So the forex market is open as far as banks all over the world are open. So that is why it's not open during the weekend, like Saturday, right? It doesn't open because the banks are not open. Already in Nigeria, you know when banks open. That's Monday to Friday, 8 to like 4 p.m. That is bad time. So now converting that now to their own time zone right now. So that is when the market is open. So it's a 24 hours, 5 days a week market. So you can make money from any part of the world, wherever you are. You just with your mobile device that connects to the internet, your laptop, your phone, your tablet, whatever it is, you can make money. Even in your bathroom, your toilet, you can sit down just by pressing buttons. As far as you have the right knowledge and you know what you're doing, you can definitely and you always make money. So with that being said, so the next the next phase of this class would be talking about terminologies used in forex. Terminologies used in forex. So it's advisable that you guys know all of this in order to like, build a solid background foundation of what forex trading is all about. So make sure you have your pen and your pencil and your notebook so you can actually jot down things. Or if you have a very solid memory and feel okay, you don't need to jot down, fine and suit yourself. This video will also be saved as well, so you can actually go back to it and watch it again over and over again, so it gets to make sense to you. Because I don't expect everybody to grasp everything right now. So the next session is terminologies used in forex trading. Yes, terminologies used in forex. Terminologies used in forex. Terminologies used in forex. Terminologies used in forex. That is it. Terminologies used in forex. terminologies used in Forex, right? So the first terminology we'll be looking at is currency pairs. Currency pairs. That's the first terminologies we'll be looking at. Currency pairs, right? So currency pairs, if you look at it, for those who have been trading with me, you see that whenever I drop a trade on a particular pair, like for example, the US dollar, Nigerian naira, if you see in the forex market, they are always paired together. Currency pairs are always paired together because we are actually trading the strength of those currency pairs. So now you can't know the strength of something until you test it against another thing. Basically, you're fighting. You can't know the strength of this wrestler without testing him with this other wrestler. So that's basically what's happening in the market. So that's why they get to pair currencies together so that they actually know the strength of those pairs. So first we'll be looking at currency pairs, and currency pairs are divided into two: the base currency and the quote currency. Let me share my screen right now. Let me share my screen right now. Let me share my screen so that you guys get to understand what I'm talking about. So let me take you to the chat. Let me take you guys to the chat. So okay, you can see right now. So we have currency. We have this divided into the base currency and the quote currency. So now the base currency is actually the first currency, like you can see right here, the British pound against the US dollar. So the British pound is the base currency and the US dollar is the quote currency. So that is basically it. That is basically it. That is basically it. So let me show you guys. All right, let me take you guys to the chat. So you can see the British pound is the base currency and the US dollar is the quote currency. You can see it right here. British pound the base and US dollar the quote currency. So I hope this makes sense. If this makes sense, drop number 5 in the chat box. If what I've been saying so far makes sense to you, drop number 5 in the chat box. 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 Drop number 5. All I've been saying so far actually makes sense to you. Drop number 5 in the chat box. Drop number 5 in the chat box. All I've been saying makes sense to you. Drop number 5 in the chat box so we can move on. Drop number 5. Drop number 5. If all this makes sense to you. Drop number 5. Drop number 5. Drop number 5 if all these things are making sense to you. Drop number 5 so we can move on. Drop number 5 so we can move on. Drop number 5 if all these things are making sense to you. Drop number 5 in the chat box so I know we can move on. So I know everyone is catching up. Drop number 5. Drop number 5. Okay, 5, 5, 5, 5. Okay, 5, 5. All right, 5. All right, 5. Okay, it's actually making sense to a lot of people. Okay, you say you don't understand. Don't worry. Chinedu Munachi, you don't understand. Don't worry. Maybe you came late. So just revisit the video on a later date and you get to understand. Don't worry. You get to understand. Don't worry. So it's actually making sense to a lot of people. So for everyone who doesn't understand, just go back and you watch this video. Over time, you get to understand. Don't worry. Just go back and watch the video, and you get to understand what I'm talking about. So with that being said, we've talked about currency pairs, right? They are quoted in twos. You guys can see it. They're paired together. The first currency is always the base currency, and the second currency is the quote currency. So that is how it is. So that we get to determine the strength of the currency. We get to determine the strength of the currency. They are divided into two, the base and the quote currency. So now we have examples of currency pairs. We have the major currency pairs. And then we have the minor currency pairs. And we have the exotic currency pairs, which will be popping up on the screen right now. So again, examples of currency pairs. We have the major currency pairs. Example: GBP USD, USD JPY, USD CHF, Euro USD. And then for the minor currency pairs, we have the GBP JPY, CHF JPY, and the Euro JPY. And then for the exotic pairs, we have the USD Nigerian Naira. So I'm going to be explaining what major currency pairs are. Major currency pairs are, are currency pairs of major economies in the world, right? Like GBP USD is the British pound US dollar. So those are two major economies. And then the US dollar Japanese yen, that's USD JPY. Those are two major economies. So that's why they are called the major currency pairs, and they are actively traded all over the world by millions and millions of traders every day, every trading day. They are actually traded. So hence they are called major currency pairs. That's what they are called. They are called major currency pairs. And then the minor currency pairs are pairs that they are also major economies, right? Economies currencies like the GBP JPY, but then it's not quoted with the US dollar. You understand? So major currency pairs are only those pairs of top economies and it's quoted with the US dollar. So if it's not quoted with the US dollar, it's just too basic, top economies, but it's not quoted with the US dollar. It makes it um, a minor currency pair. So and then for the exotic currency pairs, these are pairs that are quoted against tiny economies that are not like the Nigerian naira. Nigeria, sorry, I'm casting us, but if I'm not casting us, it's already online, sharp. Our economy is not so solid compared to the United States economy, compared to China's economy, compared to the European economy, United States, right? So far, so hence we are in the exotic pair, session, right? So that is it. So now, if you take a look, let me take you guys to charts. Let me take you guys to chart. So you can see currently, if you look at the chart, you can see currency pairs are actually they have abbreviations on which we used to identify them. We don't call it the British pound US dollar. We have abbreviations that we used to identify them. So you can take a look at right here. You can see GBP USD. That's the abbreviation for the British pound US dollar. Now, the first two letters stands for the country's name, and then the last letter stands for the currency. That's why you have GBP. G stands for Great, B stands for Britain, and P stands for pound. So that's why we have Great British Pound. And then when it comes to USD, we all know it's United States dollar. U is for United, S is for states, and D is for the dollar. So that is it. So if you also come to GBP JPY as well, GBP JPY, right? If you come to GBP JPY chart, you can see GBP JPY, GBP, British pound, and then JPY is Japanese yen. That is it. If you come to USD JPY, come to USD JPY, you can see USD stands for United States dollar, and then the JPY stands for Japanese yen. And then we also have cryptos. We also trade commodities like gold, XAU USD. XAU USD, that is gold. XAU USD, which is gold. You can see it right here. We also trade gold. Gold is also measured against the US dollar. You can see gold right here. Gold spot against the US dollar. You can see the abbreviation is XAU USD, right? So that is the name they gave it here. So that's basically it. And we also have crypto like CUSD. We all know BTC is Bitcoin. Everybody knows that. If you don't know that, I don't know what you're doing in this life. So Bitcoin, BCC, you can see right here at the top right here. BCC stands for Bitcoin and USD stands for United States dollar. So that is basically it. So now, without being clear, moving on to the next terminologies used in Forex. Next terminology is percentage in points, which is pips. Percentage in points stands for, pips actually stands for percentage in points, right? So now, what pips actually is, now let me break it down so that you get to understand. Now, Pips, same way human as we humans, our movement are calculated in steps, like one step, two step, three step, four steps. That's exact same way market movement is calculated in pips, right? So if market moves, say market has moved 1 pip, 2 pip, 3 pips, 4 pips, 5 pips, and thereabout. So that is basically it. Market moves 1 pip, 2 pip. It's just like you're saying someone moved 1 step, 2 step, 3 step, 4 step, 5 steps. So that is basically what pips are. We don't actually call it percentage in points. Everyone call it pips for short, and it's easier. So that's why we call it pips. So I just want you to know and have it at the back of the mind that percentage in points, end of story. Don't confuse yourself. It's just market movement, how the market moves. So if you sometimes hear about strategies, they be like, I open the trade and trade moves about 20 pips in my favor or 20 pips in profit. Yes. So what you should know is that if it's from the point you open this, market moves 20 steps. That's if you say market moves 100 pips in my favor. So what you're saying is from the point you open that trade, market moves about 100 pips in his favor. You understand? So that is it. That is it. That is what pips are. You understand? So the next terminologies we are going to be looking at is lot size. I know this is where most beginners get it wrong, and this is very deadly if you don't know how to like manage your lot size and everything. So if I move on to lot sizing, I would love to know if you can hear me clearly. If you can hear me clearly and everything I've said so far makes sense to you, I want you to drop number 6 in the chat box. Drop number 6 in the chat box. Drop number 6 in the chat box. Let me know. Let me know. Let me know before we move on. Drop number 6 in the chat box. 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 Drop number 6. Drop number 6. Drop number 6. Drop number 6 in the chat box. Drop number 6 in the chat box. Drop number 6 in the chat box. Let me know if you're following me. Drop number 6 in the chat box. Drop number 6 in the chat box. Drop number 6 in the chat box. If what I'm saying. Okay, okay. A lot of people are following. All right, all right, all right, all right. Okay, 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 okay. So people are actually catching up, all right? Okay, people are actually catching up. People are actually catching up. All right, all right, all right. So with that being said, right? With that being said, we're going to be looking at lot sizing now. So this is what kills people actually, lot sizing. So this is what kills people. Sorry, hold on. Um, so lot size is basically divided into three. But before I explain what is how many section is divided into, let me tell you what lot size now. So lot sizing is basically your contract size per trade. So if you open a trade, the lot size you use determines the amount of profit you stand to make or the amount of losses you stand to make as well. So that's what lot size tells you. So for those of you in my Telegram community, you guys know that sometimes whenever I drop a trade, there's always a difference between my results and your result. I actually make more because of I use a different lot size, and you actually make lesser because you choose a smaller lot size. So lot size has a crucial role to play in trading and in your survival as a trader. So yeah, lot sizing has a crucial role to play. So we have lot sizes. They are divided into three: the micro lot size, the mini lot size. You can see it on your screen right here. The mini lot size and standard lot size. So the micro lot size are for guys with small accounts between $10 to about, let's say, $1,000, and then okay, maybe 10 to like $500 or so. And then if you have like $500, then you can between the mini lot size, which is 0.10 to about 0.99, and then standard lot size. These are for guys with crazy amount of capital in their trading account. Maybe with like $100,000, get $100,000, $20,000. That's where you get to use standard lot size. So that's it. Some people get greedy at times, and instead of respecting the account balance and using a small lot size that actually fits the account balance. They want to get greedy because they want to, oh, I need to make more money, and they increase their lot size. And after increasing their lot size, the market takes them out, and then they get to take a loss, and then they come, and I see a lot of them on social media on Twitter. They're all saying Forex is scam, this one, that one. But then Forex is actually very highly profitable when done with the right knowledge. It's highly profitable when done with the right knowledge. Yeah. So all you have to do is consistent with your lot sizing, respect your account balance, and trust me, you definitely make money in the long run. So also, just be consistent with your lot sizing, be consistent with it. Make sure you're consistent with your lot sizing. Don't over leverage your account. Not because, oh, maybe for those of you on my community, not because today I make $70 on that trade. So therefore you tell yourself, oh, the next trade I'm increasing my lot size when you know you just have $30 in your account. If I'm making $70, you don't know how much is in my account. I'm making $70 at once. But then you now with $30, and that's your all in all now. You're not making you not increase your lot size. And if that trade happens to be a loss, then you liquidate yourself by yourself. And then you come out and say, ah, Forex is scam, this one, that one. I start bashing everybody. I start bashing people that I see this reader, carry to your hand and press buy and sell or increase lot size for you. So you always stick to the lot size that fits your account. So if you have anything between $10 to about $100, I suggest you stick to 0.01. For those of you trading, you guys will understand. Stick to 0.01. Don't increase lot sizing for any reason because greed might step in. You might tell yourself, oh, let me make more money. Let me increase this thing. This $10 I'm making is not okay for me. I want to make $100 once. Trust me. The same way you start to gain, that's the same way you start to lose before this. So that is it. So the next point we're going to be looking at is leverage, right? We're going to be looking at leverage. So what is leverage? Leverage is actually borrowed money from your broker. That is what leverage is. Leverage is borrowed money from your broker. So your broker, the app you use to trade, they actually give you leverage. And what is leverage? Because in order for you to open a trade of 0.01, you need about 1,000 units of the base currency. So in order for you to open a trade on, for example, GBP USD, you need about 1,000 units of GBP to open 0.01. So your broker steps in and be like, don't worry, we are going to lend you money to actually handle that trade, open the trade, and once the trade is done, if the trade is a win, you keep all your profit to yourself, and if it's a loss, you take the losses all to yourself. So what our broker does is they lend us money at the back end of our account. You're not going to be seeing it on your account. It's at the back end of it, and they're just going to lend you the money so you get to open those trades, and you know, so you can make money like that for yourself. So now we have different types of leverage. We have 1:10. So if you have $10 in your account, times it by 10, that is your buying power or your trading power. So if you use a leverage of 1:1,000, means for every $10 you have, times it by 1,000, that is the what amount of trade you can open. That is what amount of trade you can open. So if you have $10,000 and you use a leverage of 1:1,000, so 10,000 times 1,000, that's like your trading capacity. You understand? So that's basically leverage. So let me explain it this way. So for example, you want to get this juice, for example, right? And for example, this juice is about 1 million naira, and all you have is 10,000 naira. So what your broker does, they be like, okay, here's what's going to happen. We are going to lend you money to actually purchase that juice for yourself, right? And then if you make money, you keep the profit to yourself, and if you take a loss, you keep the loss to yourself. So if this makes sense so far, I want you to drop number 7 in the chat box. Before we move to the next point, drop number 7 in the chat box. Drop number 7 in the chat box if all I've been saying so far makes sense to you. If all I've been saying so far makes sense to you, drop number 7. Drop number 7, drop number 7 in the chat box before we move on. Okay. 7, 7, 7, 7, 7, 7, 7, 7. All right. Okay, so a lot of you are following, and that's a good thing. That's a good thing. So if you're not following, probably you came late. So just go back after this live session, go back and watch the live session. It's always saved on YouTube here, so you can get to like watch it and then grasp knowledge for yourself as well. And so the next point we're going to be talking about is margin. Now, margin now, since we've talked about level, so now margin now is the amount of money your broker brings per trade for you, and then you only get to bring 0.5% to 1%. So if you open a trade, I think if you have about $100 in your account, you only get to bring 0% of that amount, of that $100 or 1%. That's just $1, and 99% with the help of your broker's leverage, they get to provide them. So for every trade, you just get to like use your, you know, that is margin. That is margin, right? That's basically what margin is. So that is the money your broker locks and be like, okay, this is the money you're bringing. For example, like I said, if this juice is about 1 million, your broker will tell you bring 2% of it, and you're going to bring the rest. So that money you bring in is just like commitment. Like you just get to lock in that money and be like, okay, this is what you brought, and this is what we are going to be bringing, so you can be able to open the trade successfully. So, and then the next point you're looking at is spread. Next point you're looking at is spread. So, what's spread? So, this is the little commission your broker charge per trade for you. This is the commission your broker charge per trade for you. Your broker they charge a little commission for every trade you do. So that is spread. It's the difference between the buy price and the sell price. So that's what they charge. For example, now you go to Aboki to change a dollar. And when you go to Aboki, the first question the Aboki asks you is, do you want to buy or do you want to sell? So if you say you want to buy dollar, notice that the price is a bit higher than where you want to sell it. I don't know if anyone has done the change of the currency before, right? So if you notice the buy price be a bit higher than what they're gonna be selling the selling price. So that is basically what spread is all about. And then we have stop loss. So what is stop loss? Stop loss is basically your safety net. Now, stop loss is basically your safety net when you place a trade. Now, for example, you buy this device for like, let's say, buy for like $10, or let's say, okay, you buy for like 100,000 naira, and you're a business person, you buy for 100,000 naira, and you say, okay, you want it to go up in value so that you get to make money. Exactly, because that's what business is all about. You buy low, you sell high. So that's how we make money in trading. You buy low and you sell high. So I buy that. Let's say it was about 500,000 before, and it drops to about 100,000 naira, and you immediately purchase it and say, okay, when it gets to 500,000 again, I'm going to sell it up so I make profits. So now, when you buy it 100,000 naira, what your stop loss is actually saying, you're telling your broker that if price ever gets to, maybe it depreciates from 100,000 to about, let's say, 90,000, you agreed to walk away with that loss because you feel it will drop more in value, so you want to take that loss. That's basically what stop loss is. Is you telling your broker that if price ever goes against me, instead of going up in value like I thought it would and start dropping in value, don't take all my money, close me out in that amount of loss. So that's what stop loss is. It's like a safety net to protect yourself from the risk of the financial market. So that's basically what stop loss is. So is it telling your broker price goes against me, close me out in this amount of loss? I don't want to take any other loss. So I agree to lose 10,000 on this deal, close me out. That's basically what stop loss is. And then take profits. This is your target goal. Whenever it's okay, for example, and then now we have take profits, right? So we have take profits. Now take profits, since you bought 100K, you're looking to sell it out at 500K. So that is your take profit. And you'll be like, so your take profit is you telling your broker that if price gets to this amount, I agree to be fully right on that trade, close me out in that amount of profit. So that is what take profit is. It's the goal is set. Okay, if price gets here, that is where I want to take my profits from. So that is it. And then the next step is broker, right? Next step is broker. So now, what is your broker? So now your broker is like your trading app, just like we have our OPay, we have our UBA, we have all our trading, we have all our bank apps. So broker is basically your forex banking app where you get to deposit your money and then you get to withdraw from. So that's what a broker is. So that's you get to depositing your money and you get to withdraw from. So there's a broker right here I love to use. Right, let me show you guys. So for those of you who haven't signed up, go click the link, sign up with the broker so that you can actually trade together. So click the link, sign up with the broker. It's XNES. I love XNES because their withdrawals are instantly. The moment you click on the apply for a withdrawal, instantly, it be like OP transfer. Instantly reflects your OP, your UB, whatever bank you use. So that is why I prefer this broker, which is XNES. So moving on. The next terminology we're going to be looking at is risk to reward ratio. Risk reward ratio, RRR, risk reward ratio. So now, the good thing about forex trading, people always say, there's risks, they can't do it, you lose money, you lose money. But because they don't know that when you get into forex trading rightly, you get to make crazy amount of money. Now, for example, I buy this phone for about 100,000 naira, right? Now my risk to reward ratio is for whatever I'm risking on this phone, I'm getting to like make times two, times three of it. So for example, I buy the phone at 100,000 naira and my stop loss. I hope you guys remember what stop loss is. It's our safety net, and my stop loss is about 80,000 naira, right? So if price ever drops from 100,000 naira, if the value of this ever drops from 100,000 naira to 80,000 naira, I agree to be wrong, close me out. So now, since now, if you look at your risking $20,000, 20,000 naira on that trade, 20,000. So now, the risk to reward ratio should be 1:2. That is times two at least. But some people do times three, some people do times four, times five, times six, some people do times 10. And all these people do times 10, I don't know. But then some people, sorry, excuse me, 2 times 10. So for me, I love to do 1:2. So if I'm risking 20,000 on this, I'm looking to make 40 to 50,000, and then I'm out of that trade. So that's basically it. So now with risk to reward ratio, you get to still make profits even though you take losses. Even though you take losses, you still get to make profits on at the end of the day. So let's say you place 10 trades, right? And out of the 10 trades that you place, you lose you lose four out of the 10 trades and you win six. Now, since you lose four, let's say you're risking about $10,000 per trade, for example. Actually, sorry, it's in dollars. Okay, let's say you're risking $10 per trade, right? Now, since you're risking $10 per trade, and we lose four trades out of 10 that we take, so that's we have lost $40, and we win six. And since we win trades, we're actually looking to make times two of what we are risking. So since we lost four, that's $40, and we won six. That is about $60, right? So now, so now, times that six that you won by two, times it by two, that's over $120, right? So now that $120 profit you actually made has actually covered back the losses you took from the previous trades that you lost, and you've actually made profit on top of it. I hope this makes sense. So, if you lose 10, you get to make 20. For example, you lose 20, always aim to make 40 times two of at least times two of whatever you're risking per trade. You understand? So that's the way you get to survive before the financial market. That's the way you get to survive it. So I hope this makes sense. And so the next point we'll be looking at is steps to get started on forex trading. The exact steps to get started. So the exact steps to get started in forex trading, right? So our exact steps are first. There are two ways to go about it. The first way is to learn on how to trade, and then get your hands dirty, you lose money, blow account, fund account again, blow it, lose money, lose money, lose money, before you eventually get things to click and then you start becoming profitable trading forex. But second way is, which I actually recommend, second way is joining my Telegram community where I get to give you all my trades, you copy them. Those who have been part of my Telegram community always know that yes, our trades are actually decent. It's not like we don't take losses. We actually do take losses, but then overall, we are still profitable because that's basically how forex is supposed to be done. Even though you take losses, you should be able to, come back with killer trades that will actually recover back those losses for you and still keep the profits on top of that. Like what I said in risk reward ratio. So that's basically, so I recommend the second um way, stick to my Telegram channel. So while you're learning, you're also earning for yourself as well. So whenever I drop a trade, you just copy the trades, execute it on your account, and then make money for yourself. It's absolutely free. I'm going to be dropping the link right here, so you guys get to see it. So this is the Telegram link. Go click it out, join the community, and you get to like pick trades together. And that is basically it. Right? You get to copy my trades and then still get to stick with me and learn how to trade for yourselves. So that is the two ways getting started. So number one, so now there are tools you need to get started trading forex. There are certain apps you need. So you guys remember when I called out the broker for you guys, right? The broker right here, the broker I use. So sign up with the broker, go to Play Store, download MT5. Yeah, that's the app we use. That's where we spend most of our time trading. So you download MT5 and basically also download TradingView. TradingView is this app right here. But if you have a computer, you can just go to Chrome and search www.tradingview.com and you get to have it open and then you sign up. So this is TradingView. This is where you get to do all our analysis and you get to find out if the market will be buying or selling. You can see right here. This is a trade I called. You can see right here. Okay, this was on Monday. Okay, yeah, this was on Monday last week. This was on Monday. I called this trade around this point, and you can see how price came here and hit our take profits, and we got to make money. And then this was on Tuesday. On Tuesday didn't really go so well because immediately I called the trade right here, came and took us out. And it got in again at this point, just pushed up, took us out again, and eventually went to hit our take profit. So at this point right here. So this is the painful part. This is very, very painful. You enter into a trade and then it takes you out in the loss and then goes the original direction. That is painful. Don't worry, you see a lot of those very soon to start making sense to you. And then this also same thing happened on Tuesday, also happened on Thursday. I called out the trade, it came, took us out, and eventually moved up in our favor. So that was basically happens at times. And yeah. So this was on Friday. I didn't really execute this trade. I just saw it, but I didn't really execute it because I didn't have the time to execute it. And before I knew it, price has already moved, and I would have made money from it, but I didn't really call that out. So now, basically, that's what I'm saying. So I have, Telegram community. Oh, I think you guys don't see my screen. Sorry. Okay, sorry. So okay, but let me just go through what I was saying. So this was the trade I called on Monday for I have guys in my Telegram community, and we got to make profits because we opened right here and price pushed up to this point. And we got to make profit. This was on Tuesday, opened the trade immediately, and immediately just came down and took us out in the loss and took a loss. And I opened again, I took another entry, expecting price to go up. It took me out again and eventually started going in my direction. That one is very painful. That can be very painful. Trade taking you out first in the loss, hitting your stop loss before going in your direction to hit your take profit. Same thing happened on Thursday. He hit stop loss and then actually went to hit take profit later on. And then on Friday I didn't really trade because, like I said, I was busy and stuff like that. So that is what I want you guys That's what I want you guys to know. So download Trading View, um, Trading View, Xness, sorry, Trading View. Sign up with the broker. I told you guys this. You can see it on the screen right here, and then join the Telegram community. So you get to copy my exact trades, and then we get to make money together. So let me show you how the Telegram community looks like on Telegram. So let me show you guys what it looks like. So you open the screen. So this is what the Telegram community looks like. If you guys can see clearly, I don't know if my screen is sharing. See, it should be sharing by now. So this is the Telegram community. This is what it looks like. You guys can see how I drop. You guys can see when I'm scrolling a bit. So you can see how I drop my trade, and look at when we took a lot. It took a loss about $88 and $26 respectively. And yeah, so this is it. This, if you go through it, you will see okay, this was a win. This was $12, $14, and so basically, so it's okay. Okay, this was about $15 in profit. This was 25, just like that, like that. So I get to call my trades, It was about $50. This was 21 profit. Yeah, so I get to call my trade, and I also get to manage it for you guys. This was someone else's result. So this was someone else's result. Guy made about $23 or so. So this was my result, 38. So that's basically it. Once it's done the right way, you get to make more money than you lose. So this is about this loss. I think about $19. Yeah. So that's basically it. That's basically how Telegram community is, right? So click the link, just go sign up, join in if you're interested. So you get to pick trades, make money for yourself, and then also still learn from me when you come live like this again. So that is it. So that is it. That is it. That is it. That is basically it. So now going on. So the next step, right, is why beginners lose money. So this is the next and the final step. So why beginners get to lose money is because one, they lack proper knowledge. That's one. They lack proper knowledge and they are indisciplined. They trade with emotions, right? They trade with emotions. Sometimes they choose to be greedy and increase their lot size, like I said, and then the trade goes against them and they end up losing the entirety of their account, blow their account, and they probably call trading a scam, which it is not. And they call it gambling. And there's one funny one I saw. They said trading at Forex. See Forex sports the way they suit. They had a character or something like that. See that sports the way they suit. And I was just laughing. So that's the thing, because you have proper knowledge. Whatever you don't understand, you actually, you actually get to suffer the consequences of not understanding it. So what you first have to do is be proper knowledge on it, and then trust me, overall you get to enjoy it because trading is highly profitable when done the right way. So that is basically the reasons why beginners tend to lose. Basically, they lack proper knowledge and they trade based on emotions. They trade based on emotions, fear, and greed. So that is basically it. So if you stayed with me up to this point, I want you to drop number 8 in the chat box. Drop number 8 in the chat box. Drop number 8 in the chat box. All I've been saying made sense to you. Drop number 8. Even though it didn't make sense to you, um, even though it didn't make sense to you, later you come and watch the video and then eventually grasp everything I said. Okay, okay, everything is making sense. Okay. So that's basically That's basically everything. So now I want to prioritize your question. I want to take questions. So if you have forex and trading related questions, drop it in the chat box and I get to answer it. Trading related questions, no play, no jokes, no nothing. Trading related questions only. And I see your questions, I get to answer them correctly. So if you have any question, we have about 6 minutes left. So let me see if I can answer 5 questions before we call it a day. So if you have any questions, let me know. Let me know in the chat box. Let me know. Let me know if you have any questions. Let me know. Let me know. Let me know if you have any question. Let me know if you have any question. Okay, someone is asking what are the strategies I use. The strategy I use is basically strategy I use is it's called the chat lead strategy. I actually so that is strategy I use to price is going to be buying and then I join and I buy and know when it's going to be a sell case may be. So over time as life continues, I'll get to break down my strategies for you guys so that you guys can actually, do analysis by yourself and get to make money for yourself without me calling out. So you get to make money for yourself. And then you go and check your charts and be like, okay, so this is why life is calling this trade for a buy. Trust me, that feeling is it's going to be a very, very nice feeling when you actually, or you see a trade before me, or you see a trade and then you go into the trade and a few minutes later on the Telegram channel, and I'll call out that trade and I'll be like, okay, buy GBP USD now, or buy XA USD now. And you'll be like, already to boost your confidence that, oh, you're actually learning something. So that's it. So the strategies I use later on in later session of life as life goes on, when the time is right, I'll break them down to you guys. So somebody said he doesn't understand pips. Okay, pips is basically market movement. So same way same way humans are movement are calculated in steps, right? That's the same way the market movement is calculated, but this time it's calculated in pips. So if the price chart moves a little, the price moves, that's 1 pip, 2 pips. I don't know, the market is not open right now. If not, I would have shared my screen on trading views so that you guys will see how market is just moving like that, like that, like that. So that's what pips is about. It's just basically market moving from maybe, for example, from 100 naira to 110 naira. So that's like, for example, that's like 10 pips. So if this one was about 100 naira and then GBP US, okay, let's use currency pairs as trade. Let me forget about it. So let's say you're trading currency pairs. Okay, let's say GBP USD. So GBP USD moves from 100 naira. If, for example, hypothetically speaking, that is not the price. So if GBP USD moves from 100 naira to about 110 naira, 120 naira, so we can comfortably say market has moved 10 to 20 pips. That's it. And if it drops to from 100 naira to about 20 to 80 naira, 19 naira, 70 naira, you can say market has moved 10 pips, 20 pips, or 30 pips, as the case may be. So that's basically what pips is. And then someone asked, what's the name of the trading app? Okay, the trading apps that we use, Trader 5, MT5, go to Play Store and you're gonna see it right there. Trading View. So Trading View is where we get to do our analysis, get to spend your time to analysis, mark your charts, know where price will be selling. So Trading View is the one I showed you guys right here. Let me share my screen. Let me share my screen so that you guys will see Trading View. You guys will see Trading View. So this is Trading View, right? This one right here. This is where you can see I added some objects, all these tools. Here. These are what tells us that markets will be going up. So you can see I did my analysis with my strategy right here, and I figured out market will be going up. But then I took a loss on this trade because it wasn't yet time. Though I was right, but my timing was wrong. My timing was off. So that's why I took a loss first, and then market eventually went my way. So that is how it is. That is how it is. So this is Trading View, and so just go download Trading View and MetaTrader 5. And once you've done that, I would love you to sign up exact broker I use, which is XNES. So XNES, sign up with your brokerage, and go to the Telegram channel. I'll be dropping a screen record on how you can link your XNES account to your MetaTrader 5, because you have to link it so you can take in trades. Because your MetaTrader 5 is where you spend most of your time as a trader, not even XNES. You only go to XNES when you want to withdraw money, when you want to deposit. That's the only time. Or BSB don't even open XNES all the time. But then your trading view and your MetaTrader 5, that is the apps you get to use day in, day out. Because trading view, you come out to your analysis, and then MetaTrader 5, once you've done your analysis, you go to MetaTrader 5 and press buy or sell. So go down to Play Store, download MetaTrader 5, um, download MetaTrader 5 and trading view, and then sign up with XNES, or you go download the app and then sign up to as well XNES. So let me see. Okay, someone said, can I explain the lot sizing very well? Okay. Someone said, okay, what can I explain the lot sizing very well? Okay, so lot sizing is basically your contract size, right? Your trading power. For example, let's say we want to buy, let's say we both want to buy, okay, so based on fast. Okay, let's say we want to buy, a plot of land, and the land is sold for 1 million naira, right? And you buy only one plot of land, and it goes up in value, right? If that land goes up in value, let's say times two of the original amount, which is 1 million naira, and it goes up in value to about 2 million naira, you've made a profit, an extra profit of 1 million naira, right? But then me now with the bigger contract size, bigger buy, I buy like 100 million, I buy like 100 plots of that exact same of land, which is like 1 million. If it goes up in value, I've made a profit of 100 million as well, and you've made only just 1 million. We bought the same land, but then when it went up in value, we had different results. And it's also the case if the land depreciates in value. So if land depreciates in value from 1 million to about 500k, you'll be losing just 500k, and me, I'll be losing over 500,000, 50 million naira. So that is difference in lot size. So now let's bring it home back to trading. Now, trading, we have small lot size. Where's it? Let me show you. We have different lot sizing. If you go to your MetaTrader 5, you see 0.01 right here. So now our lot size is divided into micro lots, which is 0.01 to 0.09, and then mini lots. So now let me explain lot sizing detailedly now. Now, with 0.01 lot size, if market moves 1 pip in your favor, you're making 10 cents. Let me slow this down so that you can actually grasp it. If market moves 1 pip in your favor, you make 10 cents with 0.01. And there's someone who used a micro lot of 0.10. If market moves 1 pip in his favor, he makes $1. That's it. If market moves 1 pip in his favor, he gets to make $1. Now, someone with one standard lot, market moves 1 pip in his favor, he gets to make $10. Now, someone with 10 standard lots, if market moves 1 pip in his favor, that's over. He gets to make $100 per pip movement. And then someone with 100 standard lot size, the same analogy I used, the land analogy. You can see someone who bought bigger amount of money, who bought bigger amount of land, you make profit more than someone who bought with a smaller amount of money for a smaller land portion. Understand? So that's basically what lot size is. Now, when beginners get it wrong is they become greedy based on your broker, which is XS, has given you leverage that you can, with your small money, you can open times, you can buy massively. You now go and buy massively because you want to make quick money, and then you're forgetting the same way you stand to gain that, and then you buy and the trade goes against you. You're taking your entire account, you're leveraging your entire account. So what XNS will do, they will not allow anything happen to the money they are borrowing you at the back end of your account. So if anything is happening, it will hit your account and it will lead to total loss of capital at times. Or if not total loss, maybe you lose, half of your account, and as case may be. So that is lot sizing. That's why you have to be consistent with your lot sizing. If you have small accounts, stick to the respective lot size of your small account. So that is it. And let me see if I can take one more question. Let me see. 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 So someone say, how much can you deposit and withdraw from this app, and what is the limit? So there is no withdrawal limit, or there's no, okay. I think the minimal deposit is about $10, right? And then the most I don't know. There's no limit, right? There's no limit how much you can deposit, and there's no limit how much you can withdraw. As far as we are verified on XNES. So when you sign up to XNES, they'll ask you for your details like your identification and your proof of residence. So your full name, your details, your BVN. Make sure all those things match exactly what you have on your, on your data. You understand? Your date of birth, your names, everything. The same way it's on your NIN. Make sure that's the same way you fill it, stuff like that. So you don't have issues when it comes to withdrawing or depositing in money. So that is it. So when you sign up with XNES, they ask for all those details. So they get to verify you and stuff, so that you get to depositing money, and they also get to withdraw from there. So now uh let me see. Let me see if I can ask one last question. Okay, somebody asks, why do you love London sessions so much? Are they more profitable than others? No, no, no. It's not like they are more profitable than others. Every session has its profitability, right? So basically, my trading system is actually built around London session. That's where my, my that's where my strategy actually thrives. Let me put it like that. That is where I myself am most profitable, and that is the session I'm always active. You get, because me, I love my sleep, right? I won't gonna be trading in the night, killing myself. Asian session. Asian session are for people in that time zone, right? So I stick with the one in my time zone. So I wake up, I get enough rest, wake up in the morning by 6 a.m. That's pre-London, and then by 8 a.m. I'm already making money. That's how my strategy is. For those who have been in my Telegram community, they know how we do it. I call it 6 a.m. Most of you are still sleeping. Okay, so that is how it is. And I call it 6 a.m. By 8 o'clock, you already made money, and then you're out. You made money, and then you're out for the day. So that is basically how it is. Just like pressing buy and sell. So that's just how it is. So that's why I love the London sessions. Sometimes I do trade the New York session, which is around 2 p.m. Nigerian time too as well. That is when I don't see much activity going on in the London session. I wait for New York session to actually execute. But the London session is my most profitable session, and it works well with my strategy, and it fits my personality. So if you say you don't like your sleep, maybe the Asian session is what you like, fine. You can treat the Asian session. Just stick to what works for you. That is all. So, answer that question. Answer that question. Answer that question. So yeah. Okay. Someone asks. Okay, can you please drop the link for the Telegram? Okay, the link for the Telegram. The link for the Telegram is right here. It's right here. So go sign up. Right. Go sign up. That's the link for the Telegram. That's the link for the Telegram. Philip, that's the link for the Telegram. Okay, what advice do you? So someone asks what advice do you have for beginner traders? So one, the first advice I have for beginner traders is don't rush, right? Don't rush. Trust me, trading is simple, but it is not easy. Trust me when I say it is simple, but it is not easy, right? You definitely, you definitely lose money at some point, because financial market is just like a big ocean of water where everybody comes to like fetch their share for the day. And then sometimes if you get greedy, you can get eaten up by the whales. So that is it. So don't rush, just be consistent and slowly. I think this is slow and steady wins the race. Yeah. So don't rush and take it gradually. Not because you see this person is making $100,000, you want to make 100. I know that. So it's basically trading is basically a psychological game, right? It's based on your psychology, so it actually affects your psychology. So everybody wants to make money. So whenever they see something like this, so want to like go all in, right? Become greedy, and then once they become greedy, it takes them, and fear steps in and start sabotaging themselves. So that's the advice I'll have for a beginner trader. One, don't rush. Don't think it's a get rich quick something. If you think it's a get rich quick something, sorry, I'm not your guy. I'm not going to teach you. Just you're free to leave, right? If you think maybe you can start today, you can start making $100, or you can start making $50,000, you can start making $100,000, you can make even $1 million. Fine, you're free to leave. But then, if you want to be consistent and take it gradually, it takes years. I've been training for about 3 years now. It takes years to actually, attain mastery. And I know I'm not finally at mastery, but then trust me, I'm way ahead of you. Not because I'm smarter than you, but then because I've had more, actually done more dumb things than you when it comes to trading. I've actually blown accounts, I've over leveraged. So that's why I'm telling you, stop over leveraging. It's not nice at all. So someone say, can you please drop the Telegram link again? I think I've dropped it. So go click on it. So that is basically it. I think so. We've come to the end of today's class, and I'll see you guys next week Sunday, same time. Next week Sunday, 6:30. Yeah. So always remember, today is a new day to become a better you. So make sure you trade smart, and I'm gonna see you guys in. Make sure you trade smart, and then I'm gonna see you guys next week Sunday. All right. So bye guys, and I'll see you guys next week Sunday. Peace out.